Okay, what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be talking about how to win more trades. So today we'll be mainly focusing on market conditions, understanding what market conditions are, the basics. I'll show you some examples and also some real life setups on USD and gold as well. But we're going to be focusing on how we can stay in tune with the markets, knowing when to trade and knowing when not to trade, and also how to make a simple break and retest strategy and turn that into a very, very powerful concept. So as you can see, I've got the three main market conditions here. We've got strongly trending, markets making lower lows and lower highs. So it's a bearish trend here. But we're seeing long impulsive moves followed by a nice corrective retracement, and then again a long impulsive move forming these lower lows and lower highs. Now we've got a weekly trending market doing the exact same thing. However, the pullbacks, as you can see, are a lot more frequent, and the pullbacks are a lot more steeper, higher pullbacks, higher retracements, showing us that the market is potentially running out of steam and potentially could reverse. Still trending to the downside, however, but just very, very weak. And then we've got consolidation ranging where the market's making equal highs and equal lows and is not really moving in a particular direction. So when you're coming onto the markets, you want to identify what is the market doing. Are we strongly trending? Are we weakly trending? Or are we consolidating? The market will do one of these three things. Maybe a slight variation between them. Might be slightly in between strongly trending and weakly trending. Might be corrective and also consolidating, depending on the time frames you look at. So it could be doing a variation of things, but it will be doing one of these three things. Now we can take this information and apply it to a simple break and retest strategy and make it very, very powerful. As you can see here in our first example, we've got a nice weekly trending market here, clear lower lows and lower highs. We can see the bears are in control. Then we've got a stronger trending market here to the downside, same direction, nice lower lows and lower highs, but we're seeing longer impulsive moves, a lot of momentum, followed by some nice healthy retracement, and then again, nice impulsive moves to the downside. So both are showing a nice break and retest strategy. Prior low, break, looking for the retest to continue. Again, prior low, break, looking for the retest to continue. Now, if I was to ask you which setup has the higher probability of working out, this on the strongly trending market, or this one on the weekly trending market, you can pause the video, decide which setup you think it is. But the correct one would be the strongly trending market. Reason being, there's a lot more momentum in this market, and the bears are a lot more stronger in this market as well. So if you were to have a pullback into this area, most likely we have a good reaction and the market will continue its trend. Obviously, it's all about probability. Trends reverse all the time, but the probability of us rejecting this is a lot higher than the price failing and going higher. You can see here, nice strong impulsive move, pullback didn't even reach the prior low. That's just how bearish it is. The retracement didn't even get to the prior low before it continued. So if you were to come back and retest this, most likely we'll see a nice reaction. And in this example, you can see a lot more frequent pullbacks. And when we do have our pullbacks, you can see the market snaps through the low of the trend, snaps through the low and breaks past it and has a steep pullback near to the high of the previous move. And then we get another continuation, market snaps through the previous low, and again, same thing happens, a steep retracement breaking back above that area, and again, almost into the prior high. And again, nice break of the low. What's going to happen most likely? Market's most likely going to have a steeper retracement. It could react with this level and continue down, but the probability is a lot less. And that's, as a trader, that's what we have to deal with, probability. Probability of the market rejecting this level is a lot higher than rejecting that level there. So if you're trading break and retest and you're looking just to continue a trend and ride the momentum in the strongly trending market is a lot more present and most likely will help with the probability of your trade playing out, rather than taking a break and retest here, which yes could play out, but again, probability is not really in your favor. And again, second example here with consolidation. You can see again, consolidation there, complete the same thing. Then we get a breakout here, a very half-hearted breakout, very corrective. The market is above the resistance and retesting it. Same here, but this time we get even stronger, very, very impulsive breakout. Maybe we see some strong candles in one direction. Again, what's the probability of this breakout, not being a false breakout and working and playing out versus the probability of this breakout playing out? But clearly, again, the strong momentum, you're going to have a lot more success in the long run, 10, 20, 30, 50, 100 trades. You're going to have a lot more success with this setup rather than that setup, because again, if it is going to be a false breakout, this could easily be a false breakout. The market could just roll back in, whereas this, it's going to take a lot of momentum for us to break back inside that range. Could always be a false breakout, of course, but probability is on our side with this setup rather than this setup. So again, just by choosing and being picky and focusing on the high quality trade setups, basically when there's momentum in the market, you're going to increase your win rate and obviously increase the distance that the trade runs. And taking these setups, you might get a nice entry and the price moves in your favor, but again, could roll over. We've already seen good momentum in this particular setup. So if the market is going to retrace and continue, most likely we'll go even further as well. So again, it's a win on that side of things as well. So now I'm going to take you into some real life examples on Euro NZD and gold. So Euro NZD, if I can find this setup here. Okay, so you can see the market here, very corrective. Again, this is the type of a market where you can classify it as consolidation or lightly trending. We've got a lightly trending to the downside here, then lightly trending to the upside, or you can just look at this whole thing as consolidation. So it's a bit of both, which is where we have to interpret the market as traders. So as you can see, heading to the downside, market snapping through these lows here and having pretty steep retracements. These are not the lows that you want to be taking break and retest on. You can see how big the corrections are. When the market pushes back into these highs, this is where you're going to be focusing on your trades, at the resistance, because the market is obviously weekly trending, and in some people's books, you probably just classify this as consolidation, so they'll be waiting for the breakout. And then we start to get a reversal and the market starts trading to the upside. You can see demonstrated with this trend line here, the market's having very corrective pullbacks to the upside until it finally breaks trend to the downside. So again, you don't want to be focusing on waiting for this to break and then retest that when you can see the pullbacks are very steep. You want to be waiting for the market to get to those extremes. Anywhere in this sort of area is where you want to be placing your trades to go long. And if you're looking to short this market, anywhere in this area coming into the resistance or side of things is where you want to be going short. So just by understanding those conditions, you know that, okay, I'm not going to be taking a break and retest at this level here. I'm going to wait for the bigger retracement, which most likely will happen. And then you can start to look for your entries. And again, this is also very powerful as well for your targets. Say, for example, you've got a target all the way up here at this level here, and you're waiting for a pullback to get in long. You're getting long at this candle entry, let's say, and then you got a target all the way up there. So now what's the probability of price actually getting to that target? Not very high. We've already got a very weak trend in the market, which shows exhaustion. The market's running out of juice, which potentially could reverse, sorry. So that's number one. And number two, you can see every time the market takes out its high, it has a pretty steep retracement here. It takes out the high, big retracement, takes out the high, big retracement, takes out the high, big retracement, takes out the high. Most likely what's going to happen, a big retracement back down. So the way we can counteract this, if, for example, say you're very confident the market will get up there. Say, for example, that's your trade and that's where your final target is. What you could do is when the market gets to the high of the previous swing, make sure you close 60, 70, 80% of your profits at that area, because you understand that the market has a good chance of pulling back against you. Obviously, the best thing to do is probably just close out that trade and move on to the next one. But if you do have a swing, perspective, and you're looking for price to get to some level that you're expecting price to eventually get to, the best thing to do is secure your profits at areas where the market has a good probability to reverse against you. And this is definitely an example where if the market again does get to this high, let me just delete some of this. If the market does get to this high, most likely it's going to retrace, and that retrace most likely will come back to your entry price, knock you out break even, or come back and draw down or stop loss or whatever you do to manage your trades. And I will do videos on trade management in the future, so make sure you're subscribed for that. But this can give us a good way to understand where our target should be. We should really be pushing past this high. If you are, make sure you are securing a lot of profit, because if it does retrace, again, you can at least bag some profit from the trade. And if it doesn't get there, it doesn't get there. And if it does get there, that's a bonus. Obviously, that's a bonus. So hopefully this made sense, understanding where you want to have your pullbacks and where you want to make sure you're not taking break and retest. Now we're going to look at example on a strongly trending structure on gold and show you when it's a good time to take a break and retest strategy. Okay, people, so now onto gold on the daily time frame. So again, it's going to talk you through this market of a nice, strong, trending bearish structure versus the corrective, very, very weak structure on Euro NZD. So you can see with this one, if I just highlight the structure, I've got the high up there, low, high, low, high, low, high, and you can see nice impulsive moves followed by some nice healthy retracements. Had a bit of consolidation here, retracement consolidation, then we've got the continuation followed by a nice pullback, and currently right now we're getting some continuation, creating some new lows. So in this example here, break and retest patterns work very, very well. Reason being, there's a lot of momentum in the market, and that's the key thing we're looking for, momentum. We want the market to give us nice, strong, impulsive momentum, and then all we can do is just follow that momentum. As traders, we're not really trying to create our own waves, our own moves in the market. We want the market to give us the direction, give us strong momentum. Then all we do is wait for retracement and we follow that momentum in a particular direction. So for example, in this one, market's obviously bearish, nice strong impulsive move, retracement into this area. The probability of the market rejecting this is very, very high. And again, probability of the market coming back down to these lows and seeing a continuation of the trend is pretty high as well. You can see previously when we had support up here, the market broke through it, didn't even come back for a retest. That shows that how bearish the market is. It didn't even have enough energy, enough momentum to come back and retest that broken structure, because the market is so bearish. It consolidated for a few days, then eventually just rolled over and broke to the downside. So the market is very, very bearish. So this time, if we were to come back up and retest the level, probability of the market rejecting that is pretty high. And again, we didn't even need to. The market could have just pulled back to maybe this high and then just continue down without retesting, but it did retest. So that makes it a very, very good opportunity. And again, after understanding the structure of this, the probability of the market having a deeper retracement to come back and maybe testing the prior high up here is not that likely. Reason being, we're seeing a lot of momentum. So break and retest there, that will be our first area of interest. If the market broke through that one, we'll look at a retest of this resistance here simply. And again, we'll expect the same thing, the market to continue its trend. And again, for targets as well, this is very, very important for if you're wanting to swing your trades or just hold on for extended targets. When we're taking these type of trades, we know there's a lot of momentum. So there's a good chance that the market could again give us another strong move and follow and break structure and continue going for a while. You can see when we did break structure here, we formed a low pullback. We had a really, really strong move to the downside, a really strong impulsive move. And again, we formed this low pullback, and again, another strong move, breaking structure by quite a bit both times. So now that we've had another pullback to the upside, and now we're breaking through structure, we could do something like that again, a strong break. So again, you can look to hold your trades for those extended targets if you do have a long-term target where you expect a particular market to head to. In the other example, when we're seeing every time the market snaps a high, it has a very, very steep retracement. You don't want to be holding your trades for too long. In this market, you can hold your trades for too long because the market conditions allow us to do that. If the market, every time it was snapping through a low and it kept having a steep retracement, if you're taking a trade in that direction, you want to target those highs. And if you do want to hold on for longer for some reason, then again, take most of your profit off the table and then just have a small amount to run to those extended targets. And this will help you trade a lot more in tune with the market. So you're not out of tune trying to force things, you're trading with the market. If it's trending heavily, you can push in those trades, trading those pullbacks. If it's very, very corrective, kind of in and out, taking advantage of those steep retracements into the prior low or prior high. And if you are looking to trade ranging markets, obviously buying low, selling high, taking advantage of the market fluctuating between two price ranges. So hopefully this video made sense. If it didn't, let me know in the comments down below and I'll be sure to help you guys out. If you have any particular videos that you want to see in the future from the channel, leave it down in the comments as well and I'll be sure to add it to the list. But hopefully this video does help. Again, try and have this kind of in the back of your head when you are looking at your charts. What is the market doing? Is it trending very, very strongly in either direction? Weekly, is it corrective? Is it consolidating? And actually start to use that in your strategy. Not saying change your strategy, but know when to use it and know when to not use it. For example, if you have a very good trend following strategy, but the market is very, very corrective, it's not going to work too well. Wait for the market to be trending, or look for a pair that is trending or a market that is trending. So hopefully that made sense. If you guys have enjoyed the video, please be sure to leave a like on the video. It does really help the channel out. If you haven't done already, subscribe to the channel. A lot more content on the way. Make sure you do become a part of the family. But guys, I hope you have a fantastic day, and I'll catch you all in the next one.